Parag Thakkar is with us with his perspective on things. Parag, good to have you with us here as always. Thanks very much. Oil marketing companies, I don't know if you have a view, but it's interesting, right? As these notes started to come through, the outperformance, the run-up basically ended. Typical of markets, right? So that is one. Second, I know you have a view on SBI, so we want to talk about that as well. Go on, but.
Yeah, so first of all, my sympathies to yesterday, what happened in Delhi and the casualties due to that. Am I audible?
Yes, please.
Yes, please go ahead.
Yeah. So first coming on OMCs, see, I think that the oil and gas minister had made it very clear they want to create market cap for OMCs, and they are not happy with that market cap. Of course, after that, the stocks have rallied because oil has remained low and refining margins, as highlighted in the city note, refining margins are on the rise. So I would not like to think that anything negative, anything which creates a negative sentiment around any PSU company, for that matter, that I think will not be done by government. That is my view. So coming back to SBI, I would like to draw everybody's attention to this particular fact that this is a bank which is available at just 1.1 time book, 44 lakh crore book with a credit cost of below 50 bips. That kind of tells you and reflects to FIIs that how India is doing. 20% of the loan book of the country where credit cost is below 50 bips. I'll give full marks to the management of SBI chairman, Mrs. Sethi, to manage this because it takes a huge amount of efforts. I would say very prudent lending to arrive to this kind of a thing, right? And you have surprised the market on NII growth because of your CA growth of 18%. Current account growth of 18% and fee growth of 25%. So best asset quality, best NII growth, and you are saying that you are at the bottom of the margins and margins will see U-shaped recovery. Plus subsidiary value. See, immediately after the result, they said that they want to, they'll monetize 6.3% stake in SBI AMC, which is valued at close to around 1 lakh crore. So that releases another 6,300 crore kind of capital for them. Although they don't need capital after this QIP of 25,000 crores, but still, and they have many other things. Their stake in NSE is valued at 50,000 crores. So the subsidiary value, which right now analysts are ascribing it, say between 220 to 280, can be even higher to 330, 340 once this starts monetizing. So I would say that, and I would like to put a disclaimer, it is my top holding in the portfolio. I would like to continue to hold it for a long time. And if this trade deal also happens, I think the overall sentiment of FIIs might turn positive. They might see that rupee will not depreciate from here, at least. And some of the sector headwinds like textile or jewelry and various other labor-intensive sectors might have a good relief.
Yeah. Parag, the Bihar elections are the last phases today. The exit polls are today evening. And many have been kind of pushing forward their view. I mean, this trade deal has to happen at some point, that maybe now after Bihar elections, we will see some movement. Last night, President Trump said, but it was a very non-committal kind of a thing. He said, well, Russian oil purchases have been brought down and the tariffs will be brought down at some point, his words. But do you think markets will start positioning for this outcome now, and in what way?
Right now, GIFT 50 is not reflecting that.
Yeah.
Right? It is hardly up. So I would say that gradually things will build up, in my view. It will gather pace after the Bihar election exit poll comes out. If it comes favorable,
let's put out the chart of Gokuldas exports. I mean, I call it the India-US trade deal indicator. It's gone up to 900 plus, then comes back to 800. Where is it now? 830. So we'll see. But go on, Parag. Finish that point.
No, I completely agree with you. Gokuldas export, Welspun Living are some of the stocks which are, of course, we don't have it meaningfully in our portfolios, but I would say that these are the clear reflectors of how market is perceiving trade deal to be.
Yeah, and then we really need to see the details as well, when that deal happens, as it happens, and whether these companies continue to enjoy the competitive advantage they did in the US, their largest market in many cases.
Parag, any view on Britannia? That's name, in fact, did very, very well under Mr. Berry. They went from a commoditized business doing margins of 6-7% to high teens. And the growth as well was spectacular, with the market capitalization moving up multiple times. He's moving on now, but what's your view on the stock?
So definitely I would like, it was a big shock that On the call, Mr. Varun Berry said that we are set for a double-digit growth in the second half. So all the commentary was very, very positive. Now this has happened. It's a very, very big shock. And I think Mr. Rakshit, who has come from Birla Opus, will do a good job. And I think things can improve. But in the interim, definitely there will be uncertainty and stock will go down. That is my view.
Got that. Parag, any thoughts on Bajaj Finance?
So Bajaj Finance had been my favorite stock, and I have bought it at around 680 and all those kind of prices. But now we don't have in the portfolio because I feel that the NBFC, some of the NBFCs who make very high NIMs, high ROAs, the segments where they lend to, like MSME or in case of Bajaj Finance, captive two-wheeler, three-wheeler or financing business, those were having stress, and that is reflected in the credit cost of 2%, right? Against that, if you see SBI kind of name or HDFC or ICICI kind of names, they have a credit cost of below 50 bips. Although they lend to a lower yield segments, but their valuations are also cheap, right? SBI is 1.1 time while Bajaj Finance is trading at 5 times. So I would definitely go for names like SBI now or HDFC kind of names now rather than buying Bajaj Finance at 5x book value. Nothing wrong with the company, but just that current environment is such that if you are lending to a safer segments like mortgage and corporates and retail, for example, SBI Express Credit Loan book, which is around 3.5 lakh crore book, now I am expecting it to grow because government employees will spend more. There's 8-pay commission, plus the GST cuts have reduced the price of cars and all. So I would say that right now the environment is in favor of PSU banks or HDFC and ICICI kind of or federal kind of banks, who are not yielding to very high, who are not lending to very high yielding segments, but their segments are safe and the credit costs are low.
Parag, any thoughts on car trade? Vivek, thank you very much.
You're asking me, car trade?
Yes, car trade.
So basically, see, this is a company, one of the platform businesses which makes profit. I saw them making a 64 crore PAT last quarter. So it's a decent company and a good platform business, and they're acquiring another big platform business. So it's a good combination. Let's see. I don't have it in the portfolio, but definitely it is worth a look. Of course, the stock has rallied a lot, and I saw the trailing P is above 70. But whenever it cools off, I think it's a company to look at. It's one of the platform businesses and tech-enabled businesses, as they call it, which is making profits at least.
Tech-enabled businesses, yes, absolutely. Most businesses that list these days, they call themselves tech businesses, Parag. That's the other interesting trend in the market, right? Speaking of, other platform companies, Parag, what's your view on Swiggy? Because ever since Swiggy announced this 10,000 crore rupees fresh equity raise, the stock has been coming under pressure. It fell about 3% yesterday as well. Your views?
So, see, I will not buy this kind of stocks. Simply because, see, they have got some $800 million cash already, and they are burning around $80-90 million of cash every quarter. And they are building this war chest because Zepto has recently raised money, and the competition is intense. So they want this money from the shareholders, from the stock market, because stock market has been very kind to fund this kind of businesses, and they will burn cash, they'll strengthen their position again.
Okay.
I don't understand this maths, and I am sorry, but I would say that I would not like to. This doesn't align with my thoughts.
Okay, so no to Swiggy, and very quickly, last 10 seconds, Lenskart at 402.
So Lenskart, see, basically Lenskart, I would say that 40% business is global. The global business makes more margins. All these things are out, but let's see the numbers first. I think let the numbers come, and let the numbers which are completely recurring numbers, because I think the last numbers which Lenskart reported had some one-off. So I would say that let them get listed. Let's see the history. By the way, this Lenskarts of the world and all these companies are trading at a market cap which is more than Colgates of the world. I think let's see. We have seen Colgate from last so many years. Let's see for 1 or 2 quarters.
Okay, fair enough. That's no arguing against that. Absolutely. Let's let them prove their mettle in the market with more sustained numbers. Fair point. Good to have you in this morning, Parag. Thanks for joining in. You have a good